Dissolution of partnership firm is a very important chapter for final examination of second PUC. You will usually have one 12 marks question, which is definite to appear in the examination. And also, I can say it is also quite easier compared to many other topics to work in the examination and get 12 marks out of 12 marks. And also, you may find one or two theory questions connected to 1 mark or 2 mark, etc. So around 15 to 16 marks, you'll get it from this particular chapter, Dissolution of Partnership. This chapter is not only important from the point of view of second PUC, it is also important from the point of view of your degree. If you take BCom, BBA, you'll be working some topics related to the partnership firm. So this chapter will be useful in those degree classes when you do financial accounting as such. So in this chapter, you're going to learn the various information. As you can see there, state the meaning of dissolution of partnership, meaning of dissolution of partnership firm, difference between the both, then various methods to dissolve a business, and what are the rules of settlement of claims among other partners, how to prepare realization account, etc. This is the key in the dissolution of partnership firm. So we'll be wondering, is dissolution of partnership and dissolution of partnership firm is one and the same or not? Definitely it is not the same, because when you learn reconstitution of partnership firm in case of admission of a partner, retirement of a partner, or death of a partner, where only the existing partnership agreement will be dissolved, but the business firm will continue in the same name, but the partners will enter into a new agreement. The business will continue as it is. But in case of dissolution of partnership firm, you have to understand that the existing business will come to an end, and the business will not be continued in the same name, and each partner therein will not have any connection further, and they will be selling all the assets of the business when they close the business, and with that money they will go for paying out all the business liabilities and the claims against the business, later partners loan and partners capital. So dissolution of firm is reconstitution of partnership firm due to special situations like admission, retirement, or death of a partner, whereas dissolution of partnership firm is, as the Partnership Act of 1932 defines under section 39, the dissolution of partnership between all the partners of a firm is called dissolution of a partnership firm. In the exam, if they ask define, you have to write this definition to get the 2 marks, and if they ask the meaning, you have to write the next paragraph. Dissolution of partnership firm means all the partners of the firm cut off their connections with the firm, and the business of the firm is closed down. So business is closed, the connections will get closed, and the books of accounts also will be closed. So what are the differences between these two? You have to observe one very important thing, that is firm. Firm means business. Partnership is only an agreement among the partners. That is the one you have to keep in mind. So what are the different basis for differentiation between dissolution of partnership and dissolution of partnership firm? It may come for 2 marks theory. You have to write minimum 4 points therein to get 2 marks. First one, termination of business. Based on that, the business is closed only in dissolution of firm. In dissolution of partnership, business will continue. It will not be closed. Then, based on assets and liabilities, in dissolution of firm, the assets are sold. That means realized, or assets are converted into cash.
Sir?
Yeah.
Sir, in partnership firm, how was it terminated, and in this partnership, how is it not terminated? Sir, I didn't understand.
Okay, I'll explain again. See, termination is the business will not be terminated. I'm talking about that. Business will come to an end if the partnership firm is dissolved. Dissolution means closing the business. Dissolution of partnership firm means closing the business. Dissolution of partnership means only closing the partnership agreement. So that is in case of admission, retirement, death. That is dissolution of partnership. Only the partnership agreement will change. One partner may come, one partner may go, but the business will continue in the same name. Whereas dissolution of partnership firm means close the business. Business name is closed, business accounts is closed. The relationship between the partners also going to close. That is the meaning. Is it
Yes,
okay?
sir, I understand.
Yeah.
Yes, sir.
See the word therein, partnership, partnership firm. That is the one, firm is the one you have to check it out. Firm means business. So business is closed in the second one. In the first one, only the partnership is closed. That means only the agreement is closed. So business will continue. That is the difference I am putting in front of you now. So in dissolution of partnership, when admission, retirement, or death happens, the assets and liabilities are revalued and a new balance sheet is prepared. Whereas when the business is closed, assets are sold and that money will be used to pay the liabilities of the business because business is closed, business to be closed. Next, third basis is the intervention from court. So court means with the rules and regulation, law comes into force. Law will get involved in this process of business activities. So in dissolution of partnership, usually court will not intervene because only the agreement will change. But in case of firm dissolution, the court may interfere, the court may order you close the business, you close your business firm, because the activity done there may be illegal, maybe not lawful, or maybe any other reason. We'll discuss that further. Point number 4, business relationship. As I told, in the first case, admission, retirement, or a death, the relationship will continue. One partner may go, one partner may come. The partnership profit and loss sharing ratio may change. but the relationship will continue. Whereas the business is closed, business relationship between the partners come to an end. They're no more called as partners. Once the business is closed, the formalities will be left therein. Next, point number 5, closure of books. I told books of accounts. So in case of admission, retirement, death, there's the first situation. The books of accounts are not closed because business is not closed. Business will continue there. Whereas in the dissolution of firm, books of accounts are also closed because it is simple, business is being closed. Business comes to an end. Sixth one, important to understand, you have to imagine, listen to my explanation and understand. If you have a question, definitely you can ask me. Scope of dissolution. In case of admission, retirement or death, the business may be closed, business may not be closed. So the problems you do under admission, retirement or death, business is not being closed. Business will continue. In case of admission, 2 partners are there, 1 partner will enter, 3 partners to continue the business. In retirement, out of 3 partners, 1 partner will retire, 2 partners will continue. In death of a partner, 3 partners will be there, 1 partner dies, 2 partners will continue. That means agreement comes to an end, the business will continue. Imagine in death of a partner, suppose 3 partners are there, A, B, C in the business. A and B meet an accident and they die. A, B both die. Then C is alone. Possible A and B executors may not be interested to be the partners of business. Then if C wants to continue the business, it becomes a sole trading concern. Then business has to be closed. So death of A and B may lead to dissolution of firm, but you don't have in your syllabus. But in case of the dissolution of firm, definitely the business will come to an end. Whether it's 3 partners, 5 partners, 10 partners, business will come to an end. The 7th one is the one easily for you to understand the difference. Which are the accounts prepared therein? In case of admission, retirement, death, or whatever, 3 situations, revaluation account is prepared, partners' capital accounts are prepared, and a new balance sheet is prepared. We call it as revised balance sheet. But when the business is closed, that is, dissolution of firm happens, 3 different accounts are prepared under this situation. First is realization account, partners' capital accounts, and the last one, cash or bank account. So 3 accounts are prepared when the business is being closed. The next one is circumstances or situations which lead to dissolution of a firm. I can say under which situations, which circumstances the partnership business is being closed. See the words used here, very simple one for you to understand. Dissolution of a firm. They are not used the dissolution of a partnership firm. Firm means here in this situation, partnership firm only. It is not a sole trading concern. So in which situation the partnership firm comes to an end? First situation, point number 1, dissolution by agreement. So as we know, partnership is based on partnership deed, partnership agreement. In the agreement itself, it has been mentioned in some point of time in the future, when all the partners agree or give their consent to close the business, they can definitely close whenever they want. Maybe after 5 years, 10 years, 15 years, whenever they want. If all the partners agree upon, the business may be closed. Next, in the agreement itself, some clause is there. After that situation, the business to be closed. Suppose A, B, C are partners. Suppose C dies, the business has to be closed. If it is mentioned in the agreement, C being the important partner who takes care of everything in the business, the entire business is depending upon C, then the partnership has to be closed according to the agreement. Point number 2, compulsory dissolution. Compulsory, please understand. Compulsory means no other option is there in front of the partnership firm. They should and must close the business. First situation, when all the partners or all but one partner become insolvent. Insolvent means more liabilities, less assets. We call them as bankrupt. Suppose 3 partners are there, all 3 becomes insolvent. Or out of 3, 2 become insolvent. One person is solvent. One person cannot constitute a firm. Minimum 2 persons are required to run a business or start a business under partnership. So if one partner is solvent, remaining 2 partners are insolvent, then the business has to go for dissolution. Next situation therein, under compulsory, when the business firm becomes illegal, some activities like, maybe drugs, maybe the drinks, manufacturing, selling, or gutka, some business the government declares as illegal, then they have to close the business. Maybe when they have started the business may be legal. When the government or a court gives an order, maybe later part it becomes illegal. Possible. So then, once the new law comes, the business becomes illegal, automatically the business needs to be closed. It has happened with many states earlier. Manufacturing and selling liquor was allowed in many states earlier. Now, many states have told through their law that the manufacturing and selling of liquor is banned, is illegal. By the day they say no one should be allowed to manufacture or sell. If they sell, if they manufacture, it becomes illegal. So they have to close it. Next, when the number of partners exceed 20 in case of ordinary business or 10 in case of banking business, they have to close the business because maximum number is exceeded. It should never cross 20 in case of ordinary business. It should never cross 10 members in case of banking business. If they cross the number of partners, then it is not called as partnership. Next, on the happening of certain contingencies. That means contingency means unknown situation. So in unknown situations, the business may be closed if there is a contract between the partners to that effect. I was telling in the beginning, if a partner who is in charge of the business dies, who is an active partner, other two partners are, or other partner is not capable, not efficient, not interested to run the business, then the business has to be closed. You can see the first one, A here. By the expiry of a fixed period, you might have learned in first PUC under partnership chapter, business studies. The partnership is done for certain period, 2 years, 4 years, 5 years, something like that. The term is given, the time is given, fixed. So once the time gets over, the business need to be closed. That is by the expiry of the fixed period. Next, on the completion of a particular venture, is called particular partnership. After doing that particular business, particular activity, once that activity is completed, the business to be closed. It happens with different construction organizations. Once they complete a particular project, big project, they may take it for 5 years or 10 years. They will close the business, they enter with somebody else, somewhere else, the new agreement, new partnership, etc. Then the partners become insolvent, then business may be closed. Other one is dissolution by notice, the fourth one. You have learned again in business studies a particular type of partnership called as partnership at will, W-I-L-L. That means whenever the partner of a firm, any partner of a firm gives a notice to other partners in writing, he is not interested to continue the business and he is interested to close the business. So after receiving the notice, if all the other partners agree, then business may be closed. That is called dissolution by notice. The next one is fifth one, dissolution by the court, order. The court may give an order. We were discussing earlier, the business to be closed due to intervention of law. Law forces the business firm to close it. Reasons are plenty. You have few here. When a partner becomes insane, insane means not having proper mind, not properly able to take decisions, so then the business has to be closed. Or when a partner becomes permanently incapable of performing his duties as a partner, maybe anything, maybe physical illness, maybe mental illness. So the partner is not able to do the activities, duties as a partner, then. The third one, when a partner is guilty of misconduct affecting the business of a firm. Misconduct means misusing the assets, resources, name of the business or the goodwill of the business. It may affect the business in a bad way, so business has to be closed. Then a partner may not follow the rules and regulations of the partnership agreement. He breaks the rule. So when a partner commits such a mistake intentionally, then Other partners may go to the court of law. See, this person has not done it properly. He is not following the rules. So we are not interested to continue, close the business. In all situations, the other partners may go to the court, or court may straight away get into act. Somebody complies, then customer compliance or authority of any government compliance or any of the other partner compliance, the court will take a decision to close the business. So that is what is there in front of you. Even a third party, maybe a customer or non-customer, also having some interest in the business, if he feels there is something wrong happening, he may also approach the court for closing the business. Then if the business firm is incurring loss year after year, like situation what the businesses are faced now due to COVID, no manufacturing, no selling, it has happened. Continuous losses. Many business firms have closed. The permission of the court is always good. Even though they may agree upon to close it, better always inform the court and take a permission, guidelines. Next is any other situation, the court finds it important to close the business, then they can close the business. So you may get for 2 marks question. You not write all, you can write 4 different situations, 4 important points, whichever you feel it can be written therein. Next, if the business is closed, how to settle the accounts on dissolution of a firm. I was explaining in the beginning, when the firm is closed, the books of accounts also need to be closed because firm will not continue. So it has to be closed. And as per the rules of Partnership Act of 1932, section 48, they have to follow the rules and regulation and close the business. So if losses are therein, all partners have to share it. Then if the business has assets, then the assets can be used to pay the liabilities of the business in the proper order. First, by paying the third parties. Third parties means outsiders. First party is business, second party is partners, third parties means outsiders like creditors, bankers, for bills payable, maybe the landowner to whom rent to be paid, maybe to the government, tax to be paid, like that. All outsiders are called as third party. Then after paying everyone's money, if still the business is having some more money, that money will be used to pay off partners' loans. If more than one partner has given the loan, suppose 2 partners have given the loan, proportionate amount will be given for loans, refund of loans, not preference wise. Suppose X and Y are there, both of them are given the loan to the business. The business cannot first pay X loan, then to the Y. Whatever money available, they have to distribute among X loan and Y's loan. If they are able to pay in full again, then whatever the money left, that will be used to pay partners' capital. So partners' capital will consider what is the amount to be repaid to them. That is what we are going to prepare partners' capital account to know to whom the business has to pay. If not, from whom or from which partner business has to receive money. For that, we prepare partners' capital account. Even after paying capital accounts, capitals of partners, still extra money is there. We call it as surplus. That surplus will be divided among the partners in the profit sharing ratio. If there is no such money available, then the partners will incur the loss. Partners will not get back their capital money. they will be losing their capital. So when the firm is having liability to outsiders and their own liability, first they have to pay the debts of the firm, then partners loan, partners capital. Then if the partner has to pay, the private assets also can be considered. If it is a unlimited partnership, then pay the partners private liabilities, and the excess money take it to the partnership business and use that money for paying off business loans. So this happens in unlimited partnership. This is the danger of partnership form. The business incurs loss. The private property of the partners is also in danger. There is a situation connected to partnership firms debt and partners private debts. So private debts has to be paid, then the business liability to be paid. Last part, dissolution of partnership. Therein, two steps are involved. Realization of assets, that is converting the assets into cash, then pay the liabilities of the firm. First step. Second step is settlement of partners accounts. There, partners accounts means partners loans first, then partners capital amounts. So for that, the business has to prepare 3 accounts. First account is realization account. Second is partners capital accounts. The third one is cash or bank account.